In this video I told you that Nike at $100 per share was too expensive. And yesterday the stock plunged 20% to reach $75 per share. So today I'm going to tell you if I finally think that Nike stock is a buy. Before we start, I kindly ask you to leave a like, even more so if I saved you from buying Nike at $100 per share. And I also ask you to subscribe if you're new. So first of all, the earnings report was very bad. And furthermore, management guided for a 2025 net loss in revenue. They expect revenue to decrease by mid-single digits. This was particularly bad and the market didn't expect this. I think right now Nike is having some serious troubles given by new brands like On Running and Doka, which are gaining a lot of market share. Furthermore, Adidas is back, Adidas is going amazing, their models like the Samba are selling like crazy, so probably Nike is really losing market share, and that's a problem. And this is a big problem because Nike was trading way above fair value. This was because the market was giving its strong brand a premium. But the stock still looks very high in my opinion. Right now Nike has a forward price earnings ratio of 22 with an EBIT margin of 12%. If we consider Nike one of the strongest brands in the world, I believe it is comparable to Louis Vuitton LVMH, which has a forward price earnings ratio of 21 but has a EBIT margin which is more than double that of Nike at 26%. Therefore Nike looks overvalued compared to a company, a dominant company such as Louis Vuitton. In my opinion, given the future expected growth for Nike and its margins, the company doesn't deserve a forward price earnings ratio of 22, but it should be more like between 10 and 15, something like that. I'm saying it. I'm saying 15 because I'm giving a premium to the brand, to the strength of the brand, but if the brand wasn't considered this strong, this stock right now would have a price earnings ratio of 10. As you all know, my number one position is Crocs, which has a forward price earnings ratio of 11 with an EBIT margin of around 25 or 26%. This is also a shoe company, so it has much better numbers than Nike, but it's still trading at half of its forward price earnings ratio. In my opinion, Crocs is a way better choice, and for now I've been right. But now I'm gonna show you my actual Nike valuation. I projected 2029 net revenues of around $61 billion with an EBIT margin of 13%. Then I calculated net income and the EPS, supposing the company is going to do a decent amount of buybacks. Maybe I've been even too aggressive in this valuation for buybacks, but it's okay. So my projected EPS for 2029 is $5.15. I also projected a cumulative dividend of $2 per share from 2025 to 2029, and applying a price earnings ratio of 20, which in my opinion could be a fair valuation, the stock could reach $103. Being more aggressive and applying a 25 price earnings ratio, the stock could reach $128 per share. So the potential upside, in my opinion, is fairly limited. It's not that great. Another investor has a different opinion, which is Jeremy from Financial Education. As you can see, he thinks the stock could be worth $225 per share in 5 years, but as we have already seen many times, his valuations are really random numbers thrown completely randomly. In the next 5 years and in the next decade, Nike is not going to grow revenues 10% per year. So the valuation Jeremy published is basically absurd. Please let me know what you think about Nike. Type a comment. Do you own the stock? Are you thinking about buying it? Let me know what you think, and please remember to leave a like and subscribe to my YouTube channel. See you next time. Bye!